The inputs, historically have not had the variability, are growing more and more important. I think not only do you have to produce the product well, you've got to sell it reasonably well when profits are offered. But to sell it well, unless I learned in 2008, producers couldn't really forward sell multiple years because they didn't know what they're going to cost them to produce. So I think one of the elements to be a successful seller of 2012, 2013, which I'd say a target price, is when I can get above cost production by 30 to 40% return over your cost. Start locking it as a base level, and if the market goes up, try to get 40, 50% of gain. That between 30 and 50% return investment, if you can do that for 012 and 013, you're going to make a lot of money. Obama's going to really like you. So the only way you can effectively do that is you got to have to know what your yield is. So you got to do your job on producing the crop, which means you got to protect the right varieties and you got to do the right agronomy. I can't help you with that. You got to do that. But the area that really hurt us in 2008 is guys couldn't make a decision to sell because they didn't know what their input cost was. So I think it's extremely important to really focus in this risk time period, the next 3 to 5 years. Macro, I think there's some real exposure in the outside markets in reference to inflation potential risk with the Fed stimulation of quantitative easing and the federal government spending at such a voracious rate. I don't know if people have been watching it. Right now, the federal government, what banker do you know that would loan you money when your debt is 7 times your revenue curve and expanding, not contracting? Right now, we have $14 trillion in debt, and we only bring in $2 trillion in revenue a year. What banker would make that? And the only way they're going to, in Europe, just announced today, they're basically going to resolve the Greek problem, not by further austerity cuts, but borrowing more money. So they're hopefully to postpone the problem. And we're essentially going down the same. So this is going to potentially build a big inflationary spiral out here that's going to have to be dealt with. It's going to be very dangerous. And so, which eventually I think will reflect in higher interest rates that'll be demanded of us. And for those two reasons, I think farmers really need as much as possible to get their cash rents behavior locked in where they can have some stability in cash rent. I would want to go long term, 2 to 5 years if possible, or longer to get cash. There's some tools you can use to get longer relationships with bankers, with your landlords. But to get stability in the cash rents, I think you need to be working on your interest rate, not letting yourself get sucked into the short-term variable rates because they're cheap, because there is some very long-term exposure in interest rates. Make sure you have those long-term rates locked in. If you can't, seriously start thinking about getting yourself schooled on how to use a 10-year note or a 30-year note on the board to basically protect those interest rates. And third, fertilizer costs is our other fertilizer and seed costs. Seed costs, we can't really do anything to cross-hedge that, but fertilizer costs, you can bank it when it's cheap. You can basically forward buy it. I think a lot of people have already bought a lot of their fertilizer. I would challenge you that a lot of the producers I work with from the west to the east and north to the south, seems like there's a uniformity. They are aware of these conditions, and they have worked very ambitiously to control. I think a lot of fertilizer, a lot of cost has been locked up for 012 already. So which allows them the flexibility to start thinking about forward selling it when they can meet these 30 to 40% returns over average yield productions. And that puts them into a much more comfortable existence. They can now focus on production, knowing they got their bottom line covered. And if the market goes higher, that means they can sell more at a higher price. And it's a very, very comfortable feeling that you are in somewhat control of your own destiny rather than being harvesting what's the market going to give me type attitude. So controlling inputs, getting them locked up, getting stability so that you can become a better marketer, I think are hand in hand, and actually producing the crop. Those are the 3 elements of a long-term marketing plan, I think, in the future that you have to do.